Hello guys, so today is day 10 of the 30 days trading challenge and making money with AI, and today we are going to be going deep into candlesticks. So for you to be good at technical analysis, you must understand candle chart. So in this video I'm going to be showing you how to analyze your candle chart and what you should be looking out for when you see a particular candle. So there are different type of candle. I gave us an assignment the last time to look at it, and in this video we are going to be looking at it. So as a quick introduction, so candlestick charts are one of the most widely used tools in technical analysis, are offering traders very clear and concise way to interpret price movements over specific intervals. Now each candlestick capture 4 components which we are going to look at here. So we have the open, the high, the low, and the close. Now providing valuable insights to the trader. So because for traders, what is most important for us, if you are trading currency, right, which is our focus, so we are buying a currency pair, and if you want to trade like the dollar against the euro today, we have to understand like the price, the closing price of yesterday, and so that would determine if the price we are buying today is fair or not. So that's why the opening price and the close price, the high of the day and the low of the day, is very important. So we are still going to go further into the chart so that you have a better understanding of it right now. So by studying the shapes and formation of candlestick patterns, traders can gauge market sentiment, identify potential reversals and continuations, and make more informed trading decisions. So whether you are trading forex, stocks, or commodities, or synthetic indices, now understanding candlesticks can change and enhance the ability to analyze price action and define your strategy. So quickly, that's a quick introduction. So now you have an understanding. Because of Dan Philip that suggested that I should have a note for my teaching, so that's why I created this. If you want it, I can just share the PDF with you that I created, right? So if you want that, you can just comment that in the comment section, so that I'll send you. So but we're going to go further into like the chart so that I have a hands-up experience of what we are talking about. So why candlesticks, you may ask? So why candlesticks? Why do you understand to analyze? Why do you need to analyze like the chart, right? Now, so candlestick charts, they virtually represent price action by displaying the open, the high, the low, the close of an asset within a specific time frame. So we are scalpers, right, and day traders. So usually we look at, when we are looking at the graph, we are going to be looking at the daily time frame, 4-hour time frame, 2 hours, 30 minutes, 1 hour, 1 hour, 30 minutes, and 15 minutes where we take our trade from. So it's very important that you know that, and also it helps to recognize key candlesticks patterns, help traders to anticipate market reversals, continuations, and shifts. So when we start market structure, you understand now how traders trade, right? So you either trade a continuation or continuation of the market, or you trade like a bearish market, or you trade an uptrend, right? So using during consolidation market, when the market is consolidating, right, or in range, usually we avoid the market. But then when we start trading fully, right, you'll know why. I'm going to give you why you should do that. So here you understand why we trade, we analyze the chart now, right? So let's go and look at the candle anatomy. So this is very important. Let me zoom in. So here now, this is the candle anatomy. So every candle has what is called now the candle body, right? So so here, let me draw it. So every candle has the body. I'm going to leave the diagram for you so that here, so every candle has the body. So this is the body, right? then has like the wick up and down. So the up, this thing, we have like the open. So this is the open price. So this is where the market open. So here, so the close. So this is the low, and this is the high of the candle. So this is the high. So you just have this diagram in your head that this is a representation of how the candlestick is. So always just remember that a candle has a body, right? It has, and the body has four characteristics, right? You have the open, you have the close price. So the open price is basically the price at which the market start trading, right, within a particular time frame. For instance, if you are looking at a 1 minute time frame where the market, the candle start trading from the formation of that candle. For if a candle closes at say 2 p.m., what is the time now, at 1 o'clock, right? Now that is a close. If you are looking at the 1 minute time frame, right, so that is the close of that candle. At 101 another candle start forming. So the price at which the candle forms start forming is the open. So I just want to just bring that to our knowledge, right? So here we have the open, we have the close, we have the high, and we have the low. So just know that this is the anatomy. So this is the lower shadow, and this, so you can just have this, so you just look at it. But whenever you start trading more often, right, you get a hang of why it's like this. But then yes, so this is the anatomy. So now, so what is the open price? So the open price is the price at which an asset, the price of an asset at the start of a trading period. You get, right? So here now, this, look at this, the time now 101. So let's look at the chart now. So the open price is the price of an asset at the start of a trading period. Now showing where the market begins. It provides a baseline for comparison with the close to determine whether the price has risen or fallen. So for instance, let's go to the chart and see. So this is, so you see, look at the market. So here for an instance here, so this is 30 minutes frame. So if you want to change the time, you just tap on this, where your quote is Euro USD, you tap on 30 minutes, right? Now you can see here under 30 minutes, now it opened previously. Let's check, okay, let's check 1 minute so that you get an understanding. Okay, good. So you see, look at here, though this is the time. So here, July 11th July at 12 o'clock, right? So here you see 11 July at 10:58. So 10:58, one candle, two candle, three candle, right? So here this candle here is 10:58, right? So it opened here and closed here at 10:50. Let me be drawing on it so that you get. So here it's at 8:59. So look at this, the time now. You see, as I move this, like the time changes, right? So at 12 o'clock, it's, we are at 1 hour ahead, so that's why here. So at 12 o'clock, this is where the price, it opened. So it opened here, it closed here. So the next one at the next one 1202, it opened here, it closed there. 1203, where is the open, right? So the close, it closed there. The close of the previous minute is now the opening price of the next. So you see here, it closed here, then now open here. So this one closed, open here, it now closed here. So this became the open of this. Now this one is still in play because at 304, at 104 is still in play because it has not closed. So basically, you understand, right? So that's the open and close price. So that's how to determine the open and close price. And we'll look, so it means that it takes 1 minute for this candle to complete, right? But mostly when we are trading, we usually don't trade 1 minute, right? We trade from 5 minutes upwards because there's a lot of noise here. But then when we go deeper, you understand. If you have any question, please let me know. So in 30 minutes, it means it takes 30 minutes for one candle to form, right? So here, this one here, so look at, if you put the time here, so this opened here, so this opened here and closed there, this opened here and closed here. Then the close of this one becomes the opening price of the next one. So this one opened here and closed here. So the close of the previous one becomes the open of the next. This one opened here and closed here. Hope you understand now. So yes, so that's the opening and the close price. So let's go back to our notes. So here, so the close price is the final price of an asset at the end of the trading period. So this period can be 1 minute, 5 minutes, 15 minutes, 2 minutes, 2 hours, 4 hours, 1 day, even weekly time frame, depending on your trading preference, right? Now it is a key indicator of the market sentiment and is compared with the open assets to if the market ended higher or bullish. So for instance, right, so let's come here. You see, let me give you an instance. Okay, look at this one here, right? Now we'll look at different type of candle when we get here. So you see this candle, this inverted hammer here, right? It opened this one at 7:30, right? This opened here, right? It opened here and closed here. So this one opened, it opened here and closed here. Then the next candlestick opened here and closed here. You saw that it closed lower than this. So you see, this is a bearish hammer. So when we look, so it's called an inverse hammer. When we start looking at like the type of candlesticks, you know. So this shows rejection, like a high rejection by the seller buyers, right? So but sellers, understand, they push this market down. So that's what it means. And you see, after you saw this, right, everything was bullish here. Immediately you saw this, you saw that the market went down. So when we start reading candlesticks, you further explain. So please, you have to pay attention. And also, if you can get this book, right? So I didn't author it. This is just more like an affirmation. So that's why they put my page there. But this is the name. It's called Candlestick Trading Bible. So by Monosa Homer Husa. So here, just go get the book. You can get it free on just Google it, right? You're going to get it and just download it, or I can just leave the link for you where you can download it. So now you understand what an open price and close price is. So you can use it to determine if the price is either bearish or bullish. So for a bearish situation, what are we looking at? That means the close of the current candle should be lower than the close, right, of the previous candle. So basically, that's how we have a bearish situation. So for a market to be in bearish a condition, we have series of lower lows, right? So let's continue. Then high. So the high represents the maximum price reached by an asset during the trading period. It reflects the stronger point of buyers' interest before the price retraces. So for instance, you can see here, this is weak. You see some does not have wick, but then I'll tell you the name later. So you see this place, look at this red candle, right? That means the buyers, they took it to this point before it retraced to this point, then ended up closing here at this price. So that's what it means. So this is the high. So it's the highest point that buyers took the currency asset or whatever asset is. Because the truth is that if you understand candlestick, you like trading, you can trade crypto, you can trade synthetic indices, you can trade anything because it's same psychology, right? Then the close now is the lowest price that a commodity or a currency pair reached during a trading section. So that's that. So now that we've discussed all that, and you know the anatomy of candle, and you know what high and low is, now let's look at how to read a candlestick. So bullish candlestick. Now a candlestick can either be bullish or bearish. So when it's bullish, we say that the buyers are in control. When it is bearish, we say the sellers are in control. So we are going to look at how to read it, and also we'll look at our trading view. I also encourage that you open your trading view and look at it critically, right? So now bullish candle indicates the price close higher than it opened. I have already explained this. Now signaling buyer dominance and upward trend. This is typically represented by a green candle. So the color does not really matter. So you can see like mine. So here is green, but in settings you can change it to whatever color you want. Then the opposite is what for bearish. Now beyond color, the size of the candlestick body and 8 wicks or shadow offer what deeper insight. So we are also going to look at that. Now a long body reflects strong buying momentum or selling activity, confirming a decisive market move. Like a short body suggests market indecision or minimal price change during this section. Now long body, so now long upper or lower wicks may indicate price rejection at these levels, pointing for possible reversals or weakening in trend. So let's quickly go look at here. Now the first thing is I say that the color does not matter, right? So when you see here, like you see this place, you see that these candlesticks, they have different size and shape. So the size of the shape, the size, right, of the candlestick actually connotes like the trading volume. Now the longer the candlesticks, now the more the trading volume. What it means is that the volume of trade executed at that time, you understand, is really high or is low for a small, for a small candle wick. So for instance, what it means is that, so let me go and turn on the volume and you see. So what it means is that here, look at this place here, like sellers are people, a lot of people are selling here, you understand? So sellers are in control. That's what it means here. Here sellers are in control. All these long ones you see. Then if you see this one here, this here, if you get here, you saw a rejection. So here the buyers, got in here, you understand? So that's what it means. So you see this place here, this green one. So this is strong bullish candle. So this is a strong bearish candle. This is strong bullish candle, strong bullish candle, and this is a formation. So you cannot really tell if this is a strong bearish or bullish candle since it has not closed. So basically that's that. So when you see that it's long bearish, you mean that sellers are in control, and if it's long bullish, right, it means the buyers are in control. So but the truth is that the color does not really matter. You can change the color to whatever we can change your color preference, and I will show you in the next meeting. So now we'll go into like the bullish candlesticks and what you start looking at when you see like some particular type of candlesticks. So the first one, we start with an engulfing candle. Let me check. I think it's becoming too long, but I just like breaking this in, in little chunks, right? So that it will not be overwhelming for us. So I think I will leave it here. But the next one, we'll look at the remaining part of candlesticks and the way we look at it here, and we'll also be looking at our chart so that so that you have like a better understanding. So, and if you want my slide to read ahead of time, you can tell me. I can just share it with you so that you can learn. So yeah, so hope you learned something. If you have any questions, please do it where to ask me, and I'll be glad to help. Love you guys. Remain positive. Cheers.